shares joining the rest of the world in cheering cooling CPI numbers from the U.S. on the hopes that this is finally going to signal a pivot by central banks to pull back on their tightening. Look at that. The PSCI actually yesterday jumping 1.1% to 64.66. And now this morning, first 12 minutes of trade, the index is already up 0.75%, 50 points. We're back above 6,500, 65.17. Will net foreign buying continue though? Because yesterday it was at 1.3 billion. Here to break down their second half playbook, Jon Carlo Lim of DragonFi Securities. JC, hi, welcome back.
Hi, Mimi. Thanks for having me back.
All right, JC, first of all, we hit over 5 billion in value turnover yesterday. Welcome news, because we're coming from sub 3 in recent days. Yep. Could you tell us who bought up what stocks in a big way yesterday?
I think looking at the numbers, 35% of the value traded emanated from the financial sector, while 22% emanated from the real estate sector. Oh. In the financial sector, 97% of the value traded can be attributed to two stocks, that's BDO and BPI, whereas around over 50% of the value traded in the property sector can be attributed to both SMPH and Ali. It's hard to read too much into the numbers. It's the brokerages that were involved in the acquisition of those shares were the usual suspects, CLSA, Salisbury, and the like. So it's just one data point. So it's hard to extrapolate anything from those numbers.
But I noticed that all of these names that you mentioned in sectors are rate sensitive names. Yep. And we're coming from cooling CPI numbers from the US, giving everyone hope that maybe the Fed, will likely pull the trigger for one last time this month. Yes. And then that's it. And then we can all talk about rate cuts. Do you think this bodes well for the bigger picture here? Not just for Wall Street, but for Philippine shares as well?
It definitely bodes well. If you look at the Fed funds future, the market is pricing in one more rate hike, and that's it for the entire rate hike cycle. But the Fed funds future has swayed us in the wrong direction before. It obviously evolves as data comes in. And the reason we had such low numbers yesterday in terms of the headline numbers points to, let's say, the base effects coming from June 2022. Month on month, June 2022 experienced a 1.2% increase. But the succeeding months that follow, the base effects won't be as encouraging as it was. It's going to be 0.3%, 0.2% per month. So you're still looking at an inflation rate above 3% on an annual basis. And I don't see the Fed accommodating that type of high cost of capital.
Okay, so going back to Philippine shares, do you think that a bull case for stocks is starting to build, at least for local stocks?
Yes, yes, I do. The biggest tell for emerging market stocks is usually the strength of the dollar. And yesterday, across the term structure, across the yield curve from the 2 to 5 to the 10 to the 30s in the US, everything really substantially corrected below last week's numbers. So the level of interest rates is not the one that really drives volatility in asset values. It's really the volatility of interest rates. So now that the market is only pricing in one more rate hike, the analysts can sort of like put a terminal rate to their calculation and essentially have a more certain probabilistic estimate.
So do you think this should encourage more companies to stay listed? I mean, we've heard several companies from To Go, Wholesome Philippines, Metro Pacific Investments, all looking to go private.
Well, it's a symptom of the larger issue that we've been talking about, like the illiquidity and the lack of participation, right? So every company really has to do its own calculus with regards to whether they want to stay publicly listed or go private. Are you a company that values access to capital? Do you want the higher profile associated with being a public company, or is the cost of compliance too onerous for your stage of development? So everybody has to do their own calculus. But having said that, I believe that we should really tackle the root cause of illiquidity and lack of participation.
All right. And just very quickly, your stock, your blind item. Talk to us about the stock that you're monitoring closely and that you like. Don't tell us. Just describe. What do you have for us?
Yeah, I learned from the last go around.
Okay, so, go ahead.
So the problem here is my good friend April Lee beat me to the A rate pick.
Okay.
So I'll give you another rate. This particular rate, the last quarter, its net income rose by over 10%. Its occupancy rate stands at 96.9%. And it recently is going to infuse another asset that rhymes with apes. Okay.
All right. And what's the upside for the share price?
I think beyond the upside, I'd like to talk about adding this in terms of portfolio construction. So April correctly pointed out that rates do benefit when the yields come down. But there's another reason to add this. In the last time I was a guest on your show, I pitched like the core compounders, the indestructible six. And you want to surround those core compounders with something that's not as correlated with the rest of the stock. So traditionally, since rates, the history with rates in the Philippines is very nascent, but historically rates overseas have a 0.55 correlation with common equities. And this gives your portfolio weatherproofs your portfolio for different market scenarios.
All right, we're just gonna have to guess which stock this is. JC, good to see you. Thank you so much for joining us.
Thanks again for having me.